Hi, this is Tom Moore. I'm a partner and senior investment advisor with Capital Investment Advisors in Atlanta, and I'm also a member of the Money Matters team. Today we are going to be going over a question from one of our listeners. The question is, I listen to Wes on Sunday mornings. I'm 80, no debt, small pension, 2 IRAs, 2 stock accounts. I've invested everything in a large assortment of individual value stocks. My plan is to give my daughter and 2 grandchildren their inheritance before I die. What percentage do you think I should give each year, considering that my wife and I are in fair health for people in their 80s? Well, listener, I would start out by saying, this is one of those financial questions that I would have to say it depends. And I know that's a little generic answer to start out, but I would also want to talk about other factors, which are how much do you need to live each year? Are you planning on giving yearly or through a lump sum? And what tax bracket are you in versus your daughter and grandchildren? For new retirees, we typically would recommend a 4% withdrawal rate. That's a safe withdrawal rate that you can withdraw retirement funds, and we feel comfortable that that will last you through your retirement. Since you're not necessarily a new retiree, you're more what I would call a seasoned retiree, then you have the ability to withdraw greater than 4% from your retirement assets. For someone around 80 years old, I would think a comfortable withdrawal rate would be around 6%. 6% would last you another 16 years if you have zero growth on your retirement assets. Last you in 25, 26 years if you had a nominal growth rate on your retirement assets. So at age 80, that would potentially take you to age 96 or call it 506 for your retirement asset. So when you start thinking about this, I would give you 2 quick strategies on thinking about how much to withdraw from your assets. And again, this is general advice, but these are just 2 quick strategies that I would use as a rule of thumb. One would concern giving annually. So if you think about giving annually, I would take your retirement assets, and let's just use a hypothetical amount. Let's say this retired couple has $500,000 amongst those various asset accounts, their IRAs, stock accounts, and so forth. If you take a 6% withdrawal rate on your $500,000 in assets, that would give you around $30,000 a year. Okay. Now that $30,000 could be used for giving. It could be used for living expenses. Be used for whatever you would like to give, but that's really a comfortable withdrawal rate on that lump sum of assets. Another strategy would be if you want to give a lump sum in one particular year. If you want to give a lump sum, then I would take a little bit of a reverse approach to it. I would say, okay, based on what I need, how much do I need to have in assets in order to continue, my income needs through retirement? And again, that's where you get back to that 4% withdrawal rate. So let's take the same example. Say this husband and wife has $500,000 in assets, and just throw in another hypothetical. Say they need $1,000 a month in income. $1,000 a month times 12 months is $12,000 a year. If you say, okay, well, how much do they need to maintain that $12,000 per year? I would then divide that by 0.04, which represents the withdrawal rate. That means that they would need about $300,000 to supply them a retirement income of $12,000 a year. But we also said that they have $500,000. So in the event that they have $500,000, but they only need $300,000, that would tell you that in one particular year, they could gift up to $200,000 to their daughter and grandchildren. And that would make for some very happy children and grandchildren. If you have any questions, feel free to reach out to me, Tom Moore, in our Atlanta office of Capital Investment Advisors, or reach out to any member of our Money Matters team at yourwealth.com. Thanks.